Hello traders, this is Rich Dare from Tradesight. This is the market preview for Thursday, March 7th, 2013. Had kind of a interesting session today that we're going to talk about in detail. We had the ES higher by a couple handles on the day, but we had some extreme relative weakness in the overall Nasdaq futures. Nasdaq was lower by 10 on the day. The Dow was the best performing index on the day, up 42. But it was definitely a day with a couple of key technical features to it. And let's get right into those by taking a look at the charts of the major futures. I'm going to change things up a little bit today by starting with the Nasdaq futures. Here are the NQ futures. We have finally broke and closed above the recent very frustrating trading range that we've had for all of 2013 yesterday. Today we gapped higher on the open, but as we had discussed last evening in the market preview and also the stock scan, there were a lot of sell signals starting to flash, so we were looking for shorting opportunities on a gap up, and certainly that played out today. Today in the NQ futures, we opened up right in the area of that 8-ace level on the Murray Math box, so right up around 28.12. This is a key area of resistance, one of the three most important GAN levels on the Murray Math box, and certainly the market felt the weight of that and sent shares lower on the day, essentially opening at the high and closing at the low. Definitely a clear case of distribution on the day where these higher prices were rejected. Now, this doesn't mean that we can't recircle the wagons tomorrow and have another update tomorrow and take another shot at that 8-ace level, but it's certainly a cause for concern. Oftentimes when you get to these major levels like the 8-ace level, the 0-ace level, or the 200 DMA, they're tested, rejected, and often gamed before they are ultimately resolved one way or another. So certainly keep an eye on this 28.1250 area in the NQ futures. Yesterday's high is going to be very, very important because it was obviously just outright rejected by sellers in today's action. Now let's take a look at the ES futures, which are actually even more interesting than this. Alright, and here's a look at the ES futures. These are the broad market futures. We did open and close at a new high on the move. Note that we're 11 days up now in the seeker countdown for exhaustion. So that gives us the potential of having just two more strong days lead to an exhaustion signal on this run. We've got a decent amount of extension on this run. It's not terrific. 1 through 7 here is more drifting than aggressive to the upside, but you can see after this little consolidation, this little hiccup we had here in the market, the trend has accelerated again to the upside here, and this angle of attack or angle of ascent, if you will, is definitely steeper than what we've seen so far. So this definitely could be evidence of a later stage move here, just on the price alone. But the one thing I wanted to point out was that while we closed at a new high on the move, we closed below the open. And being up the previous day, what this leaves us with is a camouflage sell signal. Now it's a camouflage sell signal because we're up 2 days in a row. Today we're up but closing below the opening level, which is a subtle indication of distribution that a lot of non-technical folks don't really pick up on. These are especially troubling when they come at range high in a move, especially when we're as far along as we are in the seeker count here. So there's two things to keep an eye on in the next couple of days. First thing is, how does the market react to this camouflage sell signal that's on the chart right now? The second thing is going to be to monitor this bar count with the seeker tool to make sure that we don't print that 13, because if and when we do print that 13 and have that exhaustion warning in place, that's going to be a real indication here that we're going to have some more serious downside rather than just this kind of benign corrective activity that we've had so far. Alright, so here's a look at the multi-sector daily chart. Most of the sectors were decent on the day. There wasn't anything that was really particularly weak outside the transports. One thing that's notable here, though, is we're starting to get a little bit of a bounce here in the XAU. They were definitely fishing for a bottom today. Whether they're going to be rewarded for that or not remains to be seen, but certainly a little notable turn. This is definitely one of the stronger upside days that they've had, so definitely keep an eye on how this plays out. You can obviously see the nature of this trend to the downside here. It wouldn't take very much to get up and challenge that trend line if you draw it on the chart. So definitely be aware of that. And this is also the perhaps the footprint, very admittedly very early, of some more defensive positioning being taken by the market player. So keep an eye on this one. All right, internally we've now pretty much spent the oversold energy that was in the market here, as judged by our 10-day trend. We had that little hiccup in the market. We had that 1 week sell-off. That 1 week sell-off did load the market with some oversold energy. It got us above this 1.35 threshold here in the 10-day trend. Certainly that was enough to propel us to new highs. We printed a new all-time high in the it's on a closing basis for the Dow. So definitely that energy, that immediate energy, has been utilized by the market already and has been released into the charts. And you can see that. Now we're back down to that neutral area. We had a real weak reading today in the trend. The closing trend closed in the 0.6 area. So that's going to be on the chart for a while. So that'll definitely figure into these lower readings here. If we get another day or two of another real low close like that, we can actually get really close to the overbought threshold here of 0.85 in a very quick manner. But this is a very rapid drop in the 10-day trend here. Here's the total put-call ratio, still well above that climactic area of 0.5, where things just get too bullish. We're definitely moving in that direction, but we're nowhere. Essentially, we're really just kind of neutral right now, but we'll monitor this to see if we do get that climactic reading. Here's a look at the SPX TLT cross. You can see the angle of ascent here is very steep. There's been a real scramble here off that last low in the market to put risk back on. We've just about matched the previous high in the ratio here, meaning the appetite for risk is as high as it's been all year so far. So keep an eye on this. If we do get back to this upper channel here, take out this high, this is where we're going to have a little bit of resistance, and maybe the risk on has run its course and ready for another pause to the downside here. And here, looking at the SOX versus the NDX, we're back up in the neighborhood of that key area, that breakdown, but we've not been able to reclaim that yet. So this is still negative, while we have a short-term positive bias here in the SOX NDX cross. The cumulative advanced decline line ratios on both sides here are still climbing. We recorded a new high on both sides year to date, which is a positive in the daily time frame. Weekly time frame isn't quite as strong, and definitely showing some degree of loss of momentum. So definitely want to keep an eye on that. We'll take a look at the weeklies in tomorrow's report. All right, here's the daily chart of the NDX SPX cross. It's still negative. We did have this little bit of a bump up here. We do actually have a very nominal higher low in place, as qualified by this little higher high, but we really haven't been able to build on this by any real degree yet. So the potential's there for a change in trend, but for now, really haven't seen anything to really get momentum moving back to the upside in favor of the NDX, which would be positive for the overall market. All right, I'm moving on to the individual sectors. Here's the XAU. It's still kind of boxed up in this little mini range that it's been in, but it was definitely the strongest performer on the day. It was up a full 4% today. Did record a high, 3-day high, but it's still just a little bit below the 10 EMA. If we get a close and a follow through above the 10 EMA, this would be a very positive development. Admittedly, a defensive one, but one that would be positive for this chart. Here's the BKX. The BKX pretty much matched its closing high of the move. It's kind of a retest of the old high. Everything's still positive here as far as the moving averages go and whatnot. We're still above the 200, the 50, and the 10 period moving averages. Starting to climb back up here again, but the BKX has lost some relative strength because the S&P printed a new high today, but the BKX did not. Keep in mind that while the bar count still looks pretty decent here, we're only 4 days up. This 8 ace level, which is a very heavy level, is still overhead at 56.25. Here's the close cousin, which is the XBD. That's the broker-dealer index. Right now we had this little bit of a hiccup in the market, and we're starting to climb back up here again, and we're fishing for that 13th day up. We got to 12 before we turned down. We're very, very close to printing that 13. All right, now after I just double check that with my projection mode, by forcing the candle closed here, I thought it was close. This is the 13th candle up in the XBD, so we do now have our secret exhaustion signal in place. So definitely keep an eye on this for a downside. Set an alert for a cross under yesterday's low in the XBD. So we're going to keep an eye on Morgan Stanley, which already has a 13 exhaustion in place. Keep an eye on Goldman Sachs for a turn back down, and all the other suspects. All right, guys, here's the BTK. Still just a little above that 8/8 level of resistance. We did print our 13 exhaustion. I do think that this exhaustion is a little bit suspect because of the lateral nature of candles 1 through 9 here. We really only had extension here 10 through 13, so we may wind up doing a 9, 13, and then another 9 up here. So keep an eye on that, but definitely above the 8/8 level, now into the overbought territory on the GAN bar. So here's the SOX, the semiconductor index. This is 13 bars up as of yesterday. This has a little bit better extension to the upside than the BTK did, because you can see 1 through 11 here are all upside candles gaining ground to the upside here. So this is definitely a little bit better. 8/8 level, like a lot of the other charts, is looming just overhead. In this case, it's 437.50, which is really a key level. Your risk level is still kind of just above that for the seeker signal, right up in this 440, call it 443 area. So those are the levels to watch on the SOX. OSX is still kind of being pinched here between the 10 EMA and the 50. Hasn't really resolved itself significantly either way yet, so definitely keep an eye on that. This has definitely been one of the weaker sectors with less momentum. It's been below the 10 EMA now ever since the first break in the market, has not been able to reclaim that level. So relative weakness has been seen in the OSX, and keep an eye on this for a resolution to the downside, which would be really negative for the market, because right now at this stage in the market you should start to see some leadership changing from the financials and the early cycle plays into the later cycle plays like the oil services and the other late cycle plays like the transportations and whatnot. Here's a look at the Dow transports. We've taken out the previous high here on the move, but we closed lower on the day, so it's not a new high close on the move. And we're also below that 8/8 level that hasn't been hit yet. 6250 is that level, has not been taken out yet, so that's definitely one to watch. If the transports roll, I think the Dow then is going to be in serious trouble, especially if the oil services continue to struggle. Okay, we don't spend a lot of time talking about the Dow, but I do want to just point out that we're very, very deep into the seeker count here. Like some of the others that we've seen, the 1 through 8 or 9 has been fairly flat here. We are now 11 candles up, looking for exhaustion. 11, 12, 13. We can definitely get to 13 here before we recycle with this active setup that's in place right now, the 1 through 9 green bars. So definitely keep an eye on how this count develops to see if they can get to 13 before completing that 1 through 9. All right, here's a look at the oil futures. They're just kind of right now just gaming this 200 DMA either way. Didn't really make much of a move either way today. And now on to the gold futures. Gold wasn't quite as strong as the miners. The miners were definitely leading gold. But the thing to keep in mind is that oftentimes the commodity producing stocks often lead the move in the underlying commodity, which in this case would be gold itself. Didn't see too much of a move today, but definitely keep this on the radar for tomorrow. If you don't trade futures, then maybe you can track a surrogate like the GLD for tomorrow. Okay, so definitely have some cautionary indications out there. We have that camouflage sell signal in the broad market futures. That's the ES futures, and we have that 8/8 level just overhead in the NQ futures. So a couple things to think about for tomorrow. So until tomorrow, this has been Rich Derrick for Tradesight, and thanks for listening.